Hello and welcome. Today I have a very special guest here, Tsitsi Mutiti. I am so excited to have you here on the podcast at Streetwise Economics. Welcome.
Thank you, Isaac. Thank you so much for inviting me to this podcast. I'm always honored to be asked to be on a podcast, especially because I've got my own podcast and I'm the one always asking the questions. So it's good to
Yes.
be on the other side of the equation for once.
And your podcast is The Wealth
The
Conversation.
podcast is called The Wealth Conversation, which is also the name of my coaching business, The Wealth Conversation.
That's fantastic. So, for the interest of our viewers, I just wanted to give a brief background about you, and you can feel free to go in detail. I
Sure.
have known Tsitsi for a couple of months through a family friend, Wadzanai. If you are listening to this, please thank you so much for this incredible connection. And Tsitsi, I've had some conversations with her. She's remarkable, currently based in the UK, a well sought out speaker, panelist, um, wealth building, podcaster. She loves to talk about, how people can get out of debt or basically getting their financial affairs in order. So today we are going to have a wide range of conversations, specifically about some opportunities, investment opportunities in the UK. We both originally come from Zimbabwe, so at some point we would like to kind of like share some of our thoughts and insights in investment opportunities there. Welcome again, Tsitsi. Do you wanna tell us a little bit more about your story?
Gosh, where do I start?
It's
I'll
brief
start
and
with the
limited.
with the present and then maybe take people back a little bit. So today I'm a fully qualified investment manager. I actually work full time as an investment manager
Wow.
in a London office for what is now a global business. It's called Raymond James Charles Stanley. I'm also the founder of the Wealth Conversation, which was a passion project to begin with because I
Yeah.
wanted to bridge the gap between the clients I'm serving through the wealth management career that I have,
Yes.
and people who are just like me who are aspiring to be the wealth management clients of the future and also aspiring to build generational wealth. And that's how really the wealth conversation came about. I'm also a mother, a wife, an auntie, a grandmother in the African sense of the way.
Yes.
Relationships. My biological child does not have children, but my nieces and nephews, etc., have got children. Um, and generally, I'm very passionate about supporting people from underrepresented communities, especially women.
Yeah.
Passionate about helping women manage their money, build confidence with managing their money, and also navigating what I call significant financial transitions. And that can be maybe coming out of debt or inheritance, which is becoming a very big thing, or exiting businesses, for example. I think there are a lot of women who have started businesses which were side hustles, and then they've got to a point where they can either sell it or they get a cash injection. How do you manage that? But also, and understanding how our habits as individuals impact our money. And that's kind of takes me nicely to the past.
Yes.
You mentioned that, I share my money journey, which started off in Zimbabwe, as you said. I grew up in a cash economy, but also an economy that was, for want of a better phrase, in free fall. And
Yes.
at that time, I was young, so didn't really understand much about money. Then, my parents passed away when I was fairly young. So by the time I was 17, both my parents had passed away.
Sorry about it.
And, I can't, thank you so much. And I can't say whether they would have been able to teach me anything about money. But I didn't get lessons that now as an adult, I feel they should have taught me. At the
Yes.
same time, I wonder whether they knew.
Yes.
But fast forward several years, I moved to the UK in 2006, and I was in my late 20s by that stage. And suddenly, I was in this economy where it's not cash.
Anymore.
You can't do sort of like deals with people
Yes.
you
On
know,
cash basis.
make money, sell fuel here, get fuel coupons, and then you get cash, that sort of thing.
Yes.
And I had access to debt, which was something I'd never experienced before. And at that time, it was pretty easy to get an overdraft. You just had to open a bank account and they would give you the overdraft. So suddenly I had access to this money. And in my head, I thought, wow, this is free money. Needless to say, over time, I got myself into a lot of debt. We're talking, £50,000 of debt over time. And it was through a combination of things. One, not understanding how debt works, kind of also ignoring what was going on in terms of the debt as I'm digging that hole. But I was also supporting people back home. When I moved to the UK, I was a single mother. I'd left my daughter back in Zimbabwe. My sisters were looking after her. So, I had her to support, but also as the eldest. Sorry?
You had to do the needful.
Yes, indeed. And as the eldest in the family, the eldest sibling in the family, when my parents passed away, I took on that role as the parent figure. So I felt I had to continue that. And everyone was growing, everyone had needs. So there was that element of, sending money back home. I wasn't just working for myself and my daughter, I'm working for the wider family, and not just my sisters, but, the wider family. So that got me into a situation where, I'd borrow here, then borrow there, try and pay that off. And then it just kind of got out of control.
It's up very fast.
Very quickly.
And since it's a conversation, and I will tell you that, like the other time I was checking the money that I've sent back to Zimbabwe, I came to Canada in 2014 to school, and I was checking, I was blown away. It was above 100,000 Canadian dollars. So to put it to US dollars, probably you're looking at maybe 70,000 US dollars over the period from 2014, and sending to parents, family, friends, and whatever projects that I was doing, right?
Yes.
So when you look at it, and if you are not careful, this is one of the things usually in the immigrant community that sometimes people don't really get to, from my conversations with people, to honestly talk about it, to set some limits, to have some parameters and have a healthy conversation to say, in my view, I think it's a very good thing to also support people back home, right? That's social capital. But also to make sure that where you are, you're also building, like some financial cushion, you're also comfortable because life is too short. Now I'm at a point where I like these incredible experiences as well, rather than just having money. I want the money to help me experience, experience things. So I resonate with that. And so what has been like the major lessons from your experience now? Because 50,000 pounds, that's a lot of money. How did you then manage to dig yourself out of that? From our conversation, you did mention that you're at the point where you are comfortable and you have.
Yes, and I've got even more debt now. But
But
I'm not
maybe not
crying.
conservative, not conservative debt, I guess.
Well, it's more the house than anything.
Yeah.
Some consumptive debt, but I'm not in the state of what I recognize now is depression. I went for a period of 3 months. At least I can remember those 3 months where I would go to work, come home, literally just be very upset. Sometimes I'd just be crying. I didn't want to answer the door if anyone was at the door, even if it was a friend. I didn't want to see anybody. For me anyway, my experience was I became very insular, and I was just like, I didn't want to experience anything or talk to anybody because I didn't know who to talk to as well. And I think that was really down to embarrassment.
Yes.
It was embarrassment and the feeling, something that you've touched on about, we need to have these conversations.
Yes.
I felt that everyone around me, siblings, family, friends, people at work, I felt that they were on top of their money situation.
And you were
So
not.
come to them and start talking to them about it, I felt that they'd look at me and think, what's wrong with you? Worse still, I'm working in financial services and we're supposed to know everything, right? Although at that point I was a secretary. So I started off in the industry as a secretary. Yes. And I ended up doing exams to get to where I am now. But at that point I was thinking, well, I'm in financial services. I should know this stuff.
Yeah.
Just to say, everyone, it doesn't matter what industry you're in, people go through financial difficulties, and it's not about the industry you're in. It's not about the car you drive. It's actually about you and what you know. And that's one thing that came out of my situation. I got to a point where I had to ask myself, how did we get here? And have an honest conversation with myself.
Important person.
And be completely brutal and honest with myself. How did we get here? And, a few things came up: sending money back home, supporting other people, wanting to be the person who was needed. Because, for me, I had left Zimbabwe and moved to the UK on my own. Yes, I had cousins and friends here. But when it came to doing life and the day-to-day things, I'm on my own and I'm trying to build my own future. So I didn't know at the time. I now know that I had that need to want to stay connected with people back home. Yeah. And money is always an easy way,
Sometimes people take advantage from my experience. So without limits and boundaries, it can easily go south. You can
exactly
ramp up a lot of debt, and at the same time get to a point where you are not even investing in yourself or building assets, which I have seen is the most important thing for you to have, like peace of mind, like financially.
It is.
But I wanted to comment something to jump in there, Tsitsi. So I've been reading a lot of books about behavioral, finance, and something that I've realized that is very important, much more than just the numbers, also is like the behavioral control, behavioral aspect of money. For example, I can feel like I want to travel maybe to Europe. I want to travel, but then that's the behavior. That's how I feel. But to be successful when it comes to building wealth, you really have to be careful about to manage the behavior. And I know quite a number of economists who actually got Nobel laureates. I think uh, Kahneman, there was a guy who also got the Nobel Prize because he managed to actually explain that if you are able to control your behavior on how you manage your money, that's a lot, in actually helping you manage your finances. So that I just wanted to point that out. And there's also this guy who wrote The Psychology of Money, Morgan Housel,
Yes.
talks a lot about just the behavior, right? To just say, oh, you know what, I'm not in a financial position to support you at this time.
Yeah, completely agree. And I'll add to that because for me, when I was actually studying to become a wealth manager, there was a chapter, a very short chapter on that very topic, behavioral finance. And I absolutely loved it because that is the key. If you don't understand the triggers for why you make certain financial decisions, it becomes very hard to reach those goals. So you can set as many goals as you want for yourself. But those triggers, and I had to understand some of those triggers. And one of the things I realized about myself was, I was giving money away. And I kept asking myself, why am I giving money away? Why am I not saving for myself? Why isn't that important to me? As you said, you're not investing in yourself. Why am I not thinking about the future? And I haven't gone to therapy about this, but over time, I realized that there's a significant event that happened in my life, which I interpreted in a certain way, and it's manifested itself in so many different ways in areas of my life, including my money. And that was my parents passing away. And I realized that over time I had interpreted it as, anything that I value gets taken away. So it was easy for me to let go of anything of value, i.e. money, because it's going to go, I might as well give it to somebody. That was what was informing that behavior of being very comfortable with giving. After unpicking that a little bit, I then realized that, I need to start thinking about myself.
Yes.
But I had to overcome this fear of being selfish, because people, when people say, oh, you're so selfish, that's apparently a bad thing, right?
I mean, apparently, if you take it that way, right?
Exactly. That's how we are socialized. And I then realized that, I heard this phrase and I thought, you know what, it's so true. And we hear it a lot of the time, but at one point it just hit me that, you have to give from a cup that's overflowing.
Yes.
And to get to that point, you have to fill your cup first and then give from the overflow. So invest in yourself, save for yourself, and then whatever is extra you can give away. And that's my guiding principle now. If I don't have it, I don't have it.
You don't. And sometimes people want to do, sorry, I wanted to just say this, emotional blackmail, to kind of like, use it as a weapon to say, oh, like especially sometimes some family members, right? But I think, you can help, you can support, but I think it's very important to give people like a hook so that they can fish for themselves. And something
Exactly.
that I've learned over time, particularly on doing projects in Zimbabwe, is that it's very important to empower them, but to also have like specific targets and benchmarks to say, when we get this, if this doesn't work, that's fine, right? Then that way you can keep your risk. But the most important thing that I've also seen is that I need to build a solid foundation. So for me, that's
100%.
having a 1 year or even more worth of emergency fund. That makes sure that my family here is comfortable, right? And then I should also then invest in assets that can generate income. And then if I can maybe then take part of the profits, right, for impact, to help other people, to support within the reasonable limit, then that's fine. Because if you see the most rich, the ultra rich, they are also giving back, because money, you can have so much money, but then there's this study that if you have money, I think there was a professor from, I think, Wharton School, right, who says up to 75,000, right, the money, you feel like, okay, you are getting more money, you're getting more excited.
Yes.
But then beyond that certain level, right, it defeats it becomes like the happiness that you get, it doesn't get much. But then maybe you hit 200,000, right, and then you need to go much higher to then feel the impact. But
Yes.
to say, at the end of the day, I think it's very, very important to have a very structured and methodical plan to, supporting our community. But also, it's not for everyone. It's extremely difficult to build wealth, in my experience, but it's not impossible. So that's why we have these conversations. But I
Yes.
wanted to poke you a little bit more. So how did you get out of that? Like, I didn't, I think we
Yes.
didn't finish that. So
No,
now,
we didn't.
so there's specific steps
Yeah,
in identifying what was the problem.
they were. So first of all, I got to a point where I was just sick and tired of being sick and tired of being in that situation. Um, and I can't say that there was a specific event that happened, but I just got to a point where I was just like, I've had enough.
Yes.
So I then thought, what can I do? And I had, through some of the mail that was coming some of the mail that I was opening, most of it I wasn't opening, there were lines saying, you can contact insolvency company, or you can try and consolidate your debt, etc. So I contacted a debt consolidation company and spoke to someone, and basically the gist of the conversation was they could help me consolidate the debt, so put it into one debt, so effectively a loan. Everything would be collapsed into a loan. They'd pay the creditors, and then I would be paying them back a small, affordable amount every month.
Interest.
It would obviously include some interest, but I wouldn't have all these different accounts where I'm owing money, different companies that I'm owing money to, and the interest would be one interest. It would be easier to kind of manage. Yes. So that sounded like a very good idea. The guy did some rough calculations based on the information I gave him, the income that I had, my basic outgoings, rent, food, etc. And then the different debts that I had and the interest rates for those. And at the end of doing the calculation, he said, you could, if you pay X amount, it was a couple of £100. I don't think it was more than £300 a month. You will, within 6.5 years, you'll be debt free.
Wow.
And I thought at that point in my head, I said, 6.5 years. Yeah. I can't go through this for another 6.5 years. Because also I was aware that my credit score was being impacted and it was very low, and I wanted to rebuild that. Not the only reason I wanted to rebuild it was because everything I was hearing was you need a good credit score for anything. So that was the main reason. I had no plans to buy property or anything like that. I just wanted a good credit score. Yeah. And for most of these debts to fall off your credit score in the UK, it takes about 6 years. So I thought to myself, it will take these debts that will be paid off by this thing 6 years to fall off. And then I've got another 6 now.
Yes.
So anyway, I said to him, thank you very much. I'll send you the information, because he wanted me to send actuals. So I said, I'll do that, and then we can get the ball rolling. Got off the call, straight away, got my laptop, put together a spreadsheet of every. Now I'm opening those letters. So I had to face my issues, right? And I opened all the letters which I had been putting away in drawers, in plastic bags, and whatever. So it's interesting. I was actually keeping them, but I wasn't opening them. Did the spreadsheet, tried to understand what the interest rates were, a column for the interest rates. So at the end of this, now I knew the exact amount that I owed in total, because previous to that, I just knew, I owe this here, I owe that, but there were different figures floating around in my head. But now I could see it in black and white, and I could see the interest rate that was being charged on each one, and I could compare them. And then I also then did a, income and expenditure analysis. So different tab in the spreadsheet, put in my income, all my outgoings, and I actually went through my bank statement to understand my outgoings. And, that's where I found things like, I'm paying for subscriptions that I didn't even know I was paying for. And I'm asking myself, why did I make that purchase?
I am laughing. We did the same exercise, and it's amazing how much leakages that you have for things that you don't even need, right? Subscribing for things, but the money is just going out every month. So you can shave off maybe 300 to 400 Canadian dollars, like in our case, and then invest the money to things that you like. So yeah, please go ahead.
Yeah, exactly. And at that point, it was more about, I can actually move that money to reducing my debts.
Yes.
And it was hundreds, a good sort of £250 was just leaking, going.
That you don't need.
I don't even know. And by this point, my daughter was now in the UK living with me. So I've also got, issues with, a child who's going to school in the UK and all that stuff. So suddenly I just thought I have to get my act together. So the one thing I did was I plucked up the courage to call every single one of the companies that I owed money to. You know, some were banks, some were, you know, these store cards, and explained my situation and asked if they could stop charging interest.
Okay.
And most of them did.
Wow.
I now know that that is something that you can ask them to do. It's something that's possible because these companies want their money back.
Yes, at least.
You know, and more likely than not, you not paying interest won't really be a big impact to them because they're charging other people interest anyway elsewhere. So that I was surprised with. And so I thought, okay, I need to maximize on this. And then I started paying off the debts. And one thing I did was I focused on one of the, I started paying a minimum on each of the debts, but then I focused on the smallest one to try and get rid of that one quickly. And then when that was gone, whatever money I was putting towards that one, I then put it to the next smallest one on top of the minimum that I was paid. I now know, I didn't know this then, I now know that that is actually a way of debt, which they call snowballing.
Yes.
And, you know, I carried on, I continued doing that. Because another thing that I realized through this process that I used was that the money that we use to pay off debt, even if you're paying the minimum for a credit card or whatever, you're actually not using that money. So suddenly I'm now seeing how much money I'm paying every month towards debt. And I'm thinking, what could I do with that money? So that really incentivized me to try and pay it off quickly. And when I paid the small one off first, I thought, wow, okay, I can actually do this. And then, you know, to get to the end of the story, so I don't bore people too much, I basically paid off all that debt within 1.5 years, as opposed to 6.5. Yeah.
And that was because you took control of it. You took ownership of the situation. Well, congratulations. I wish we were there.
Thank you.
Here you are, because this is a remarkable story. And tell me, Tsitsi, how did you feel psychologically after that debt overhang? Like, how did you feel? Like, how did you celebrate? Did you do something special after?
No, I don't think I celebrated. I think I was so tired.
Okay.
No, you know, as all, you know, any single mother who's listening to this, or anyone who's gone through raising children on their own, you know, male or female, you know, the children don't give you a break whether you're trying to pay off debt or whatever. So, you know, I had a child who was, you know, I had to look after, but also at the same time, I was actually studying to become a wealth manager. So I was very busy. And the thing I learned to do was to automate. That just made it, you know, and I like round figures. So what I would do is use round figures, set a standing order, and I just knew it was going out automatically every month to those things. Because, you know, once you've worked out how long it's going to take and the amount, it's pretty straightforward. And when you finish paying one, the payments stop, and then I would then go in and adjust the next one where I was adding, you know, adding money on top of to try and get rid of that debt quicker. But psychologically, just to answer the question specifically, I think when I think back to that period, it was a relief, a real load off. And I felt very positive and confident about being able to make financial decisions for myself. I also felt that now I think I know how to deal with money issues when they go wrong. And that's one thing I feel we need to do better in terms of when we're teaching financial education globally. I know here in the UK, there is a big push to bring financial education into schools and make it part of the curriculum, which is absolutely fantastic. One element that no one is talking about is how to teach people what to do when things go wrong. And it's okay, it's fine to say, contact the Citizens Advice Bureau. That's a free service here in the UK where you can go and they'll help you with anything to do with living life, including debt. Speak to the bank. It's great to say that, but actually there are things you need to do as an individual to get to that point. And I think it's also important that we teach people and help people understand that that is not the end of your life. It's not the end of your career. It's not the end of anything. Because I thought like that being in debt was the end of everything. For me, I was a failure. And we have heard of stories where people have, taken their own lives because of money issues. And actually, there is definitely a way out of it. Some might take longer than others, but there is a way out. And I like to think about it this way, there are a lot of countries that are in debt.
Yes.
They're still going, they're still...
In the US, I think the last time I checked, it was 36 trillion, but it's a bigger economy, of course. If you then look at GDP per capita per person, that's much bigger. But that's fantastic. Honestly, I mean, I was in such a situation, but I think my credit card, I had a credit card debt. I think it was about 5,000, 6,000. But what really like the challenging thing is that the interest, because basically if you are accruing a lot of debt, you are actually doing the opposite of building wealth. And by debt,
Yes,
I'm just saying this because there are different kind of debt. If you are buying a house, investment, it depends. If you are making more money than you are paying on interest, then you can build wealth on that. But there is
yes,
quite some risks on that. But if you are taking credit card debt and you are paying interest of 22%, think of it inversely. If you are investing your money and you are getting 20%, Warren Buffett, for example, he was getting an average of 20% per year. And not many people can do that. And he was, so what that means is like in 4 years, you can double your money. If you have 10,000 after 4 years, that's 20,000 at least, right? And after 4 years, now it's a bigger base, it's more than,
and
40,000.
you're getting that interest on that bigger base. Yeah,
Exactly. So that's the opposite. But if you are paying, you are on the opposite side. You are losing money, right? That's what we
yeah,
call opportunity cost in economics. So you have to, at some point, you have to shift your way of thinking to be on the side of building assets. And that's something that I've been passionate about. And sometimes I feel like when I see on social media, sometimes it's not like, people may be investing quietly, right? And then just choosing to show the flashy things, right?
yes,
People can do that. So, but when I am talking to clients, one of the most important things that I've told people is build an emergency fund. And then that way you can avoid the situation where you can fall back and go back into the what? Into the high interest debt. And then once you start
yes,
building assets, you're investing, but you educate yourself as well. So I'm glad
yes,
you did both. You educated yourself, you paid off the debt, and now you kind of like insinuated that you still kind of have some debt. Do you want to paint a
yeah,
picture on that, how you are managing it now? I
I
guess
will.
smartly.
Sometimes. But before I do that, I'll just add to what you said about the emergency fund. That is so important. And what I realized when I was going through that journey of paying off my debt, because that money was going somewhere else, I
Yeah.
realized that I'm actually not using, I'm earning that money, but I'm not using it.
Yeah.
So when I finished off paying my debt, I was now putting that money into savings because I wasn't using it anyway. I was paying it away.
And you
Um,
develop the habit of saving.
Exactly, exactly. And what I find sometimes that people do is once they've paid off the debt, they then want to spend that money and it
Mhm.
starts that cycle again. But I always say, it's fine, maybe spend half of it, but still put something aside because you're still building. And so your point about having that emergency fund, rainy day fund, or whatever you want to call it fund, it's important because it then means you can borrow from yourself
Yes.
at no interest, and you're not having to get from the credit card, or you can get a credit card, but you know you've got that buffer there to help you. If you get into some sort of financial difficulty, you can throw the money to that. So in terms of where I am now with my debt, my credit score is now like excellent. And it's been excellent for a long time. And it's a function of a couple of things. I'd say because I decided to take action when I did, and I decided to do it quickly and not do that 6.5 years. It gave me more years to be getting closer to the positive, because I don't know how long it would have taken me to get to that 999 score, which is what they use here in the UK mainly. So there's that good credit score tick. And then I suddenly found that I was being offered debt. So for a long time, I was like, I do not want to touch debt. I don't want to see it.
Yes.
Never again. I don't want a credit card. I don't want a loan. I didn't want anything. Everything. If I'm going to pay for it, I'm going to pay for it there and then debit card.
Yeah.
Because I was very anti, and even with my daughter, I used to say to her, "Don't get debt, don't get debt." Now I do use credit cards. I use them mainly to manage my cash flow. If I want to do a big project, for example, I got our garden redone. It was going to cost over 10,000, and I thought I'm not going to tie up my money in that. So I paid for it using a credit card and then paid that off over time.
Guys have a line of credit, that side, like where you can kind of like leverage your asset, like a house.
Yes, you can, but then we've only had the house for 5 years. You can do all sorts of things. I think those get a bit complicated for most people, but yes, you can leverage your property. You can also go into lines of credit where you can leverage an investment portfolio as well.
That's what the rich people do.
Sorry?
That's what the rich people do. I was watching,
Yes.
I think a few weeks ago, Peter Thiel, I think he is, like a shareholder in Palantir, if people know Palantir. And I think he was leveraging like 1 billion worth. I mean, we're talking of, the ultra rich. I
Yeah.
read the story about Mark Zuckerberg leveraging, the shares from Facebook.
Yes.
The idea is because now you are now taking this as a loan, you are borrowing, right? And they usually get ultra low interest rates. And now
Yes.
you get some tax benefits because you are borrowing, and then that interest payment on loan. So that's how the rich, can,
Yeah.
like kind of like build wealth. And that's why you see sometimes most shareholders, they sell their shares. I was reading, I follow Palantir and quite a number of stocks. And Peter Thiel has been selling. Jensen, the CEO of NVIDIA, I think I read the story that he was selling 900 million worth of shares. And sometimes they want to diversify the risk, right? So that's their
Yes.
sort of, but these are maybe the top, maybe that may not apply to most people like
Yes.
you
Yes.
and so at this point. But there are ways, I think it's about shifting the mindset from being a consumer to more like an investor. And I don't know how
Yes.
enough I can emphasize that. And some people may say, oh, you are saying that because you make more money, you are doing this, but from your story you can learn that you were intentional about it. There are certain things that you have to start with the information that you have now.
That you have. Exactly. Exactly.
You empower yourself, and you have no idea that if you give yourself time, you know you can achieve quite a lot in terms of like
Yeah.
freedom.
Yeah, I've actually done a podcast episode which will be coming out in mid-June, and
Yeah.
it's about what I call the 3 Cs. And you've literally talked about it, commitment. The 3 Cs to building wealth for me are commitment, being committed to the whatever goal it is you want to achieve, whether it's I want to have £5,000 in savings, or I want to be financially free, whatever that looks like to you, or I want to buy a property, committing to that. And
Yeah.
then compounding, we spoke about that, the example of if if you're earning interest on 10,000 or $1,000 or pounds or Canadian dollars, so whichever currency you're
One of
using.
the seven wonders of the world, like what
Seven
out of
wonders of
it,
the world.
yeah.
And consistency, be consistent, you know, review things. So for me, those are the three key ingredients. And underlying all of that is giving yourself time. The sooner you start, the better. The sooner you start, the better and stronger that habit is going to be. The sooner the sooner you start, the more you save over time. You know, and I see that a lot with people when it comes to their pensions. You know, once people get to sort of 50, they're panicking. My pension isn't large enough, and what, because they hadn't started putting in money early enough. So, you know, give yourself time.
Yeah, you know, I was going to ask you about a little bit about the UK, because here in Canada we have, you know, the old age security, we have Canada pension plan if you are working, but there are also other registered accounts like, you know, tax-free savings account. I'm not going to bore you with the details, you know, RRSPs, you know, for education, registered education savings fund for kids. But also, you know, companies can also do, you know, some contributions. But
Yes,
what I'm learning is that you really have to understand the system within which you are. In Zimbabwe, I'm sure there are systems, you know, like in terms for the to take advantage of the tax, you know, situation legally. Do you want to share, like, you know, broadly, like, you know, the UK, in the UK, what do you guys have there in terms of those kind of accounts, and what sort of investments are there as well?
sure. Yeah, the UK, I think the accounts that are accessible to most people, first of all, we've got what we call the individual savings account.
Mm,
In short, it's called ISA, ISA.
yeah.
That's what most people know it as here in the UK. And what it is an account where you can invest or save up to £20,000 every tax year. And in the UK, the personal tax year runs from the 5th of April to the 6th of April the following year. So 5th of April 2025 to, sorry, other way around, 6th of April 2025 to 5th of April 2026
Mhm.
will be the 2025-2026 tax year. So between 6th of April this year and 5th of April 2026, an individual who is tax resident in the UK can save up to £20,000 in an ISA. And that money, whatever interest it earns, is tax-free. If it's invested and you sell within that ISA, whatever profit you make is not taxable. So you won't pay tax on that. And since we're talking about tax on profits, that's called capital gains tax. So the gain on your capital. And every individual in the UK in this current tax year has got an allowance of £3,000. So you can sell stock outside of an ISA and get a profit of up to £3,000 and you won't pay any tax. But once you go over 3,000, you become liable for tax. And that capital gains tax allowance also applies to property, so second homes, not your main residence. Yeah. I won't delve too much more about tax. So the first one is an ISA. And there are different types of ISAs. You've got the normal ISA, which is for people aged, actually from 16 onwards, you can set one up and get that £20,000. Yes, you can have a normal ISA from 16 onwards, but I think at 16, it's normally a cash ISA, and then it can convert into a stocks and shares ISA later on. For children, the day a child is born, you can set up a junior ISA, so a junior individual savings account. And in my investment management work, I had a client, actually the grandfather of this child, phoning me and saying, we'll call him Tom.
Yeah.
My son Tom has just had a daughter, Elizabeth. We'll be sending over her birth certificate. Can you send me the forms to set up a junior ISA?
Imagine.
And Yeah, and at that time the allowance for children was 3,000, and yeah, £3,000 in there. And this child has got about, I don't know, close to 60,000 now. They're not even 10 yet.
Yeah, by the time, let's say they want to go to Cambridge or they want to go to Australia, the conversation will not be about we don't have money. Let's say the child says,
No,
I want to go to Harvard or McGill or University of British Columbia. It's like, okay, let's go and take a tour so that you see for yourself if you'd like this school. So
yeah,
growing up in Zimbabwe, I think, and my parents, they are wonderful. They are still there. I'm very grateful for whatever the support they have given me and they continue to give us. But I think, they were operating in a very volatile and fragile economy, and it's a different kind of situation. But I have no excuse of not doing that for our child, right?
exactly.
So that's why it's very, very important to start. Sometimes you can do like $50, but
Exactly. Yeah.
think, choice, the courage, compound interest, and also giving yourself time.
Giving
Imagine
yourself time.
20 years or 18 years when he wants to go to invest and you're putting. So in
Yeah.
Canada, it's 2.5 the last time I checked. If you put 2.5 in the registered education savings fund, the government gives you 500. Can you imagine a grant? So that's you can actually put 3,000, right? Or more, right? So that's a very important, vehicle or something to.
That's amazing. That's amazing. Yeah. So with the junior ISA, which is for children, at the moment the allowance is 9,000. So you can put up to 9,000. And I keep saying up to because people look at these products and they say, "Oh, I don't have 9,000." And I always have to remind them it's up to. So you can put in £2. You
Yeah.
can put in 10. If start with something and
Um,
build it up. You don't have to put 9,000. You don't have to put 20,000 in an adult ISA. So that's for people from 18 onwards. There is another product which was issued a couple of years ago called the Lifetime ISA. And this is targeted. You can set up the Lifetime ISA between the ages of 18 and 39. So once you hit 40, you can't set it up. And the idea is the government was trying to encourage more people to save. And so the allowance for the Lifetime ISA is £4,000. But what happens with the Lifetime ISA is you get a 25% uplift from the government on whatever you put in. But you can only withdraw money from this account on 2 occasions. The first one is when you buy your first property, so using that money as a deposit for your first property. And then the second time is when you retire. So it's kind of like a bit of a pension product in a way. But again, it's got those benefits like the ISA, the junior ISA, and the Lifetime ISA. Any income produced in there is tax-free. Any profits that you realize when you sell stocks and shares in that account is tax-free as well. But the beauty with the Lifetime ISA is the government give you 25% on your 4,000. And again, it's up to 4,000. So I got my daughter to set one up when she turned 18. And I started her off with £500. And then I've now got a standing order where I just put in £100 every month.
Without thinking.
She's now an adult. She's working. So I've encouraged her to also start adding. But I thought, this is what I can do to at least give her that opportunity. And, it could end up being 20,000. Hers is invested. So it could end up that, it might be that she ends up with a £30,000 deposit for a property. That's more than I had.
Yeah.
Just sitting, I had to save for my own deposit. So that's my way of trying to help her in the future. And I guess the other product that I'll talk about is the pension. Everyone who is tax resident in the UK and who pays tax and is working has got access to the state pension if they're paying national insurance. The amount you get on retirement will be dependent on how many years you've contributed to the state pension. And I believe that it's 35 years. You have to have contributed for 35 years to get the full state pension. So if you're someone like me who's only been in the UK for 18 years, when I retire, I won't have reached that 35 years, but you can actually top up the pension. So you get to that 35-year mark in terms of money, and then you'll get that state pension. And
Or
then
you can just get the prorated amount.
yes, or you can get the rata amount. Most people will have a workplace pension. A lot of people ignore those things, but I always encourage people to look into their workplace pensions and understand how they work, because some companies encourage employees to contribute to their workplace pensions, and then the company will then add a certain amount on top of your contribution. So they will make their contribution, and then you can then if you make a contribution, they'll say contribute 5% on top of what you've contributed.
That's wonderful. I know we can talk and talk. So in the next couple of minutes, I wanted you to maybe share something that you'd like to share as a parting shot, or something that you are burning to just share, because you have a wealth of experience. In this field, you work with people with money. Are there some certain trades that you see, like you gave an example of that family that called and said, we want to set up,
Mm.
is this something that's common, or anything that you may want to share as we wrap up?
Yeah, I think as a parting sort of comment, I would really encourage your viewers to start having more conversations about money and wealth, because it's through talking that we realize, in terms of if you're in debt, you're not alone. You also get to see and hear what other people are doing when it comes to money. And you start to discover that, oh, there's a certain product out there that I don't know about that this person is using. And you can learn a lot from there and then do your own exploring. So have more conversations about money. Also, learn more about protecting wealth. So do you have a will? Do you have a power of attorney in place? Those are so important. And I find in our communities, many people don't have that. But it's not just the Zimbabwean or the Black community, even the white community. I find there are a lot of people without will. So how are you protecting the little that you have today? Because actually what I found is over time, that little can grow. And then suddenly you've got a lot of wealth, but it's not protected. And then the next generation ends up with nothing, or a quarter of the something. So a lot of us are working towards building wealth for our children, but they may never get that because we haven't protected it with something as simple as a will.
Wow. That's interesting. Thank you so much for the privilege of your time. And I'm going to share your website and some information so that the viewers can also tune in to your podcast. And please, I'm waiting for the for the podcast to come.
Yes, mid June this year, the first episode will be coming out for the season 3. But there are already episodes from way back out on Spotify, Apple, and YouTube. Just look for the Wealth Conversation, and you'll find it. You might have to put my name there, but the Wealth Conversation will come up, and that's my podcast.
Before you go, do you want to tell us a little bit more about your coaching program?
Sure. My coaching program is evolving as we speak, but my main program is I do one-to-one coaching for individuals. It's a 12-week coaching program, and it really supports people to become clear about what their goals are, their financial goals, their life goals, and then we work through a process of helping them understand their habits and also understand what's happening with their money. We will also go through that process that I went through, where we're saying, what are you spending your money on? Is this in alignment with your goals? Okay.
Boring but necessary, I guess.
Say that again.
Boring but necessary, I guess.
Yes. So necessary. Well, if people are engaged, it doesn't take that long. And then we start building in what are the products that you can use to help you on this journey to get to where you are. So, your pensions, investments, savings, etc. All of those things will be covered in the program. And then I do have a 1-hour consultancy call, which people can book through the website. And people tend to come with sort of 3 financial challenges that they're having, and we'll work through that on the call together.
That's fun. Thank you so much, my friend, for the privilege of your time. I know we could talk more and more, but thank you again. And to the audience, like I always like to say, trade and invest wisely, and may the markets be on your side. We'll see you in the next video. Thank you.
Thank you, Isaac. Thank you so much.